Okay, folks, good morning and welcome to Swing Trading Today. Thanks for joining me again, 3 a.m. 5 a.m. in the morning. If you could just drop a note in the chat screen, let me know where you're from. And let's begin with what we're going to talk about first today. We're going to talk about the economic data that was released yesterday, a little bit, a rundown of what will happen today. And then tomorrow we'll talk about really the big number that's going to matter for this week. So let's get to it. Yesterday, actually, let's go back to Monday, where we had the Chicago PMI come out. That's a regional number. And we saw a contraction below 50. Any number below 50 on a PMI is a sign of contraction, not expansion in this economy. So we got a read of 47.1 versus 50.4. On Tuesday, ISM manufacturing number, horrible. This is a national number, horrible. The prior read was a contractionary number, below 50. And the number for this month, or prior month, I should say, September, was 47.8. So the numbers thus far this week are not looking good. Construction numbers looked horrible. ADP yesterday, it's not about the read from yesterday, which was bad. It's about the revisions. The prior number was 195,000 jobs for August. They revised that number down to, I think it's 135,000 jobs. Bad revisions, a bad number yesterday. So that's why you saw the markets take it on the chin. Now, today you have factory orders at 10 a.m. So if they spike this market, which they're probably going to, wait for 10 a.m. Don't go buying this market until after the morning. Ideally, you're waiting until the 3 p.m. hour because they have a tendency to fade the market, just as they did yesterday. So the number to watch today is weekly jobless claims. I don't expect much there. That's a weekly number, volatile, not really even volatile. It's just a consistent number. So if you see a big breakout or a breakdown, something to watch, but you need trends. You need back-to-back numbers to come in disappointing or positive to really move the market. You have ISM non-manufacturing coming out at 10 a.m. Big number. Remember, this is a services economy. So this number is going to influence the market. Again, factory orders, and then you have a couple of Fed heads coming out later on today. Lord knows what they're going to say. Always talking. They never stop talking. And tomorrow, the pimp Mac Daddy of them all, non-farm payrolls. So, we got Jay Powell out tomorrow too. 2 p.m. Be careful. All right, so it's been a volatile week. Let's get to how we did yesterday. What we did yesterday is we cut our loss on Angie's List. Let's go to that chart. Technically, we're still in a trading range. I didn't want to fight the market. We broke down to a new daily low. We broke down below recent support. This was a swing trade, so I said, let's face it. The market's weak. First out, best out. We broke down to a new daily low. We cut our loss on Angie's List, which wasn't a large position. Now, what we did do very well in yesterday was our gold mining position. In fact, we added to it. I'm going to talk to you about that in a moment. Also, our silver position did very, very well yesterday. These are the trades that are our core positions, and we plan on building the silver position even more aggressively in the coming days and weeks. Gold mining to a lesser extent because we already have a large position, and while we'll buy when it strategically makes sense, I'm going to do so very, very carefully. We were in there yesterday opening up a new trade, and that was this. We went in to generate income. off of our gold mining position. And what we did was, rather than going in and buying the shares outright, got to make sure my spelling's right. We simply sold naked puts. Now, what does that mean? What we did is, rather than going in and buying the shares, what we did is we sold to open X number of contracts, generating a premium paid to us. So it's a bullish bet. We got paid $2.10 per contract, betting that the shares would close. The expiration is 10/11, would close out the week of 10/11 above $30 per share. Now, if it closes down below $30 per share, those shares will be assigned to us. However, it will be at a discount to today's pricing. The price to us will be $27.10. Where did the shares close yesterday? Over $30 per share. That's good for us. So in this trade here, what we're doing is we're not buying the put contracts. When you buy a put contract, you're betting that the shares are going to go down. And in this case, you have you have a stock or ETF that's in an uptrend, and you don't want to bet that a stock in an uptrend, unless it's extremely overbought, is going to decline, because you're going against the trend. And it may be a contrarian, but that's not what I like to do, bet against the trend. So in this case here, I said, okay, I'm willing to put on more of a position here. However, I want a discount if they're assigned to me. And I'm using time decay as my friend. If I buy the options, time decay is my enemy. So I'm being the banker, not the borrower, if that makes sense. If you have any questions, drop it in the box. And if you haven't already done so, if you could please like this video, subscribe to my channel if you haven't already done so. I have a goal of 2,000 members by December the 31st. So please, if you can help me out there, I really appreciate it. Leave a comment. Even on the replay, I will get back to you. And click that subscribe button, that little bell button, and you'll get notified of when we go live. So that was the trade for yesterday. And when it closes out, I'll share with you the symbol that we opened up. And if you want to join 14-day free trial offer, we send out trade alerts, my team and I, to members. And last night we did a private members session talking about the monthly strategy for where we think we're going in this market. So sign up, you'll be able to get access to that commentary. All right, so, and you get TrendSpider free. If you're at silver and gold level members, you get TrendSpider for free. If you want a much lower price with no TrendSpider, but still access to me, access to our private group sessions, just sign up for the titanium level and you still get trade alerts. All right, so let's go to the pre-market activity. We're going to kick things off with the bond market. And the bond market this morning, I'm using the 10-year Treasury futures, and we are pressing higher. So despite the fact, I've already taken a look at this, the stock market futures, despite the fact that they're popping up higher this morning, we'll go to that chart, those charts in a moment, we're seeing bond yields or bond prices move higher. What does that tell me? It tells us that the trading desk at the Fed, the New York Fed, they're in there and they're buying more bonds. They're pushing bonds higher to keep yields artificially low. So going on to, thank you for that like. I really appreciate it. Thank you. It helps me with YouTube. YouTube, what they do now, if you watch a video, you'll see more and more. You'll see Fox News, which is a great channel, CNBC. They'll push those videos of these mega companies to you rather than the original content creators, the small guys like me who just simply want the truth about the markets to get out. And I'm not speaking my book. I'm going to tell you the truth. What do I think about these markets? Whereas with CNBC, you have the talking heads on who have to speak their book. They need this market to continue higher. Why? It's because they can't short the market for the most part. And B, they can only sit with X amount of dollars in cash. They need to put the rest to work. So they need the markets to go higher. And all they do is they come on with their pom-poms and, they're slick salesmen, but they come on with their pom-poms and they cheer the stock market higher. And if you want that, watch those channels. But I need to push for likes, subscribes to get my content generated now. It's a sad thing. You know, YouTube's a great partner, but, you know, they're changing their algorithm, so it makes it a little bit more difficult. All right, so let's take a look at the dollar. Now, the dollar, you could see here, is under some stress in that we are now putting in lower highs. And yesterday, we broke down below prior support. So what does that tell us? It tells us that we have a double top on a 4-hour basis. This is not a weekly chart. It's not a monthly chart. It's not giving you a macro breakdown yet. All right, so I'm not overly bearish on the dollar right now. As I keep saying constantly, is that the dollar is the least dirty shirt in the bin relative to the yen, relative to the euro especially. So the dollar is weakening up here a little bit, and we have a double top. We've broken down to new lows, so we have a confirmation breakdown on a 4-hour basis, right? But that's short term. That doesn't mean that on a macro basis it has broken down. Moving on to gold. I want to take, after I take a look at the dollar, then I want to take a look at commodities. Good morning. Thank you for joining. We have gold, which is up. We were down only a short while ago, and no shock there. We had a fairly good day yesterday, and what we're looking for, obviously, is a breakout to a new daily high. Yesterday's high was 1511.40. We had a bullish reversal bar. This last 4-hour bar, which opened up about 12 minutes ago. We have higher lows in RSI. If I didn't mention, these are 4-hour charts. These will all be 4-hour charts. So we're looking for a continuation move higher here on gold. And again, we increased our exposure to the gold miners yesterday by selling puts. That's a bullish play. If you're just joining now, if you could, again, please hit that like button and subscribe if you haven't already done so. And the goal is 2,000 members by December the 31st. If you can help me out there, I'd really appreciate it. Earlier in this video, I went over our naked put trade of the gold mining stocks yesterday, bringing in income using time decay as our friend, not our enemy. We want to be the banker on the trade, not the borrower. Borrowers buy options, which is not always bad, but you need to be very, very strategic because you have time decay that works against you, especially when you're trading weekly options, which is what we're doing. I don't want to pull my hair out waiting for a stock, an ETF to go up when I have using weekly options, when I have time decay, which is rapidly evaporating, right? The value of those contracts. I'd rather sell premium, bring it in, put it in the bank, and have the shares at worst assigned to me. Good morning, RL. And at best, those contracts expire worthless, and I keep those premiums in my bank account, and I put them to work at a later date. So gold is continuing to press higher here this morning. And with gold, I want to take a look at silver. Silver had a very good day yesterday. We did close off the highs of the session. However, net, still good. We're putting in higher lows. RSI confirming. We're down slightly on the session. So silver looking okay. Moving on to oil. We'll finish off with the commodity sector first. Thank you for the likes, folks. Appreciate it very much. Thank you. Oil. You know, I went over this last night with members on the private group session, the monthly chart of oil. And, you know, oil's been in a range for so long, you can't appreciate until you go back to a monthly chart the fact that we are still in a bear market on oil going back to 2008. We're putting in higher lows. We've stopped putting in lower lows, but we haven't broken out above trend yet, and it's struggling really, really hard to hold on to recent support. So oil again is down this morning, and it's not looking pretty. And with the pressure that is on the president right now, as we proceed into the 2020 elections, he's going to need to keep the price of oil at least range bound. If we break to new lows here, it's going to spell trouble for the economy. It's going to spell trouble for the frackers, because remember, one of the highest paying jobs here in the United States nowadays are related to the fracking industry. That is the president's, some of his core constituencies. If you see layoffs in the fracking sector, Elizabeth Warren becomes a more probable candidate. I think it's a far shot that she gets into office, but if this market sniffs out that you're going to have Elizabeth Warren as a possible, not even probable, but a possible candidate, even competing with the president, brother, look out below for this market. Look out below, because it's going to go tanking well before the 2020 elections. So be very, very careful watching the polls. Watch the Rasmussen polls. Those are the most honest polls out there for the president's approval ratings and his polling relative to other candidates. HTZ took a dive. We'll take a look at that for you. Hey, Paul, good morning. Paul is one of our very, very good members. Thanks for joining, Paul. Good to see you. All right, so, and if Tom joins in, I don't see him on. If Tom joins in, the microphone issue has obviously been fixed. It was a simple issue. It was just a matter of me with my getting used to the live streams and remembering to put the microphone where it should be. So thanks for the heads up there, Tom. Appreciate it. All right, so oil looking weak. Let's take a look at the S&P futures. So we're up this morning, no shock there, right? We're getting a bounce this morning. I don't think it's going to hold. You know, the economic data may come out and help support the market. Perhaps we'll get a tweet. Perhaps we'll get one of the Fed heads speaking, and it'll help drive the market higher with a promise of more heroin. But at current, as far as I'm concerned, what we're seeing here is a dead cat bounce off of an oversold condition relative to the Bollinger Bands and relative to a prior resistance level, which is now acting as support. So to me, this is a bear flag formation. And these are usually resolved, unfortunately, to the downside. So I would not be a buyer of these markets. Data at 7 a.m. What time frame? Are you on the West Coast, RL? Because you do have economic data coming out at 10 a.m. Eastern time. I'll wait for your reply. We have a delay in when I say something and when you guys hear it, so I'll wait. We're looking okay in the morning, but it's a dead cat bounce, and we'll probably some selling into the news. So watch for a pullback and a retest. Maybe we'll get that, form a base, and move off the lows. But it all depends upon, okay, so that makes sense. Yeah, more economic data coming out this afternoon. Very, very important economic data. We have services sector PMI coming out today. Big, big number. We had the manufacturing numbers that came out, horrible, signal of contraction. And that's a smaller segment of the economy. So the services sector, far more important. And we need to keep an eye on that number. So, yes, great point. We need to pay attention to that 10 a.m. number, Eastern Standard Time, 7 a.m. West Coast time. So, on the NASDAQ, you're seeing something similar here. Not so much a bull flag setup, but you know what? Close enough for government work. It's a dead cat bounce. The typical resolution to this formation, you can already see with the topping action, profit taking at resistance. The typical resolution is that we break to the downside. Moving on to the Russell 2000, excuse me. We're getting less of a pop higher here. We're up about 1/3 of a percentage point. Now, I went over last night with members on our monthly analysis of the charts as to where I want to begin accumulating a position to the short side using the TZA. And I will link to it at the end of this video. So if you guys want to fast forward, or if you want to just segue into the monthly analysis of the charts, you could see what I was talking about with regard to the TZA. I am reluctant to go shorting this market right now because I am concerned about the 2020 elections, and I'm worried about headline risk. However, I can't ignore the technicals. And despite the fact that we have seen a lot of weakness this week on the overall markets, the leveraged ETFs that I'm looking to put on haven't broken out yet on a monthly basis. Despite all the damage that's been done technically on a shorter term basis, we haven't seen a breakout yet, a macro breakout on those leveraged ETFs. So I want to be very, very deliberate with opening up a short trade into the 2020 elections. And I'm going to wait until I get that monthly breakout. Because if we get that monthly breakout on the TZA, I know exactly where to put my stop if that breakout fails, and I keep my loss small. And if it holds, I add along that support level, which was prior resistance, and then I add more on a breakout above resistance, if that makes sense. If it doesn't, please leave a note below. So the Russell, dead cat bounce here. What else do we want to go over? I think I covered, let's go over nat gas. That's been a hot topic of late. We're still in a downtrend here. We're seeing a bounce this morning. Today, being Thursday, we have nat gas inventories. I believe it's 10 a.m. or 10:30 a.m. I think it's 10 a.m. Eastern Standard Time. They'll come out. Be careful. That could definitely move natural gas. So moving on, we'll go over Hertz. Any news on Hertz that drove it lower yesterday, or is it just simply technical selling along with the market? It helps me if I know that, taking a look at the chart. And while I'm waiting for that reply, if you're just joining, if you could click the like button, it helps me out a great deal. Click that subscribe button so you get notified of future videos, and subscribe to my channel, please. And it really helps me out with the YouTube algorithms, and I'm trying to reach that goal of 2,000 subscribers by December the 31st. So thank you very much in advance. Appreciate it. All right. So, yeah, we saw a break of support yesterday, but the markets were sending some signals here. This is a daily chart. Think it was just the technicals? Okay, that would make sense. All right, so, yeah, okay. Yep, gotcha. All right, so we knew as the, and this is the value, I'm going to illustrate this, of TrendSpider. All right, I drew this line here. Now, a click of a button, boom, there are your support and resistance levels. So yesterday, actually, a couple of signals. Let's backtrack on this. We saw topping tails several days ago, beginning here on the 25th. That's a sign that you had prior buyers selling strength. Fast forward to the first, where we broke down below this lower band of support. That meant that this daily uptrend was, at the bare minimum, under pressure. At worst, it had broken daily trend. It broke daily support. Now, we held this support level I had drawn, and this is like the line in the sand, which yesterday it broke. So the lesson learned here is that if you have a market that is weak, as it was the day before yesterday and today, you got to take the signal by the market and act quickly, exit the shares very, very fast. Like with Angie's List. Yesterday I saw a new daily low. I said, you know what? I'm not fighting this. I know that there's some support below. I'm not fighting it anymore. We made a new daily low. There aren't enough buyers. We've been sitting in this trading range for several days now. There's just simply not enough support below to keep the shares aloft. And watch this. Today, Angie's List is going to rally right through the roof and make a fool of me. Why did I stay long of Angie's List? Because you had a lot of short covering and we were holding support on the markets. I digress. Back to Hertz. So we broke support yesterday, and we were stopped at some weak support, and it looks as though we could quite very well move lower. So what I want to do now is, rather than focus on daily support levels, because our daily support, our daily trend has now been broken. So now I want to step back. This is my style of doing things, is I want to step back and say, okay, where are my historical support levels? To do that, I need to get rid of, I can keep the daily chart up, and this is the value of TrendSpider, but I want to know where my weekly support levels are. So we're going to take off the daily, throw on the weekly, and this is a major problem here. Because doing the macro analysis, on a daily chart, these dashed lines now represent weekly support and resistance. And we had broken out above weekly support back here on September the 12th. But we failed to hold it. This was a breakout point failure, meaning while it was great, we had the volume, we had the support necessary to recapture prior support, which should have now acted as resistance. It didn't, what I like to call it, it couldn't hold its mud. It didn't have enough buyers to support this rally back, and sellers, these guys here and back here, those guys that have been sitting through this downtrend, they want their money back, and they sold that strength. So now we broke back down, rallied, put in a lower high, and broke down to new lower lows. This is a broken stock, and in all probability, it's going to go lower. I don't know whether or not we're going to have monthly support here, but we'll try it out anyway. No. So what I'll do is I'll bring up a weekly chart with a monthly overlay. All right, so the macro picture here. I'll take a pause for a second. For those out there, this is a weekly chart with a monthly overlay. Would you consider, I would ask that you drop a note in the chat box, is this a bullish setup or is this a bearish setup on this chart? And I'll give a moment. Pardon the silence. Okay, so there's a lag here, and I'll continue to speak if we get any answers on this chart. So in my book, this is a very, very bearish chart. Why? It's because we're not using an intraday chart. We're not using a daily chart. We're using a weekly chart. With that, we're also using a monthly overlay. So this is not a day trade. This is not a, all right, they're coming in. Trent, yep. JA, yep. I'm with you, brothers. This is a macro trade. This is a very high level view. And my analysis of the market is typically based upon war, right? Paul, absolutely right, brother. It's based upon war. So if you have a small skirmish, you're looking at a day trade, a swing trade, and you're looking at the battlefield very close up. If you're looking at a trade from a daily view, that's your 30,000 foot view of the battlefield, maybe even a 10,000 foot view. Weekly chart, more of a 50,000 foot view. That's more of a macro view. You get a feel of where the shares have been over the course of not days, but weeks and years. A monthly view, you're looking back over months and years, and you're getting a feel for, okay, we know where the shares have been, what the trend is, and where our historical support levels are. In essence, we filter out the noise. And here on this chart, weekly chart, monthly basis, what the chart is telling us is that we filtered out all the daily noise and garbage that the daily chart provides us, and that we have broken. This might be a weekly chart, but we broke using these dashed lines on TrendSpider. We've broken a monthly support level. That is huge. And not only have we broken a monthly support level, that occurred some time ago, weeks ago, back in June. We've rallied back. We have another lower high. So what are the probabilities of us breaking down to new lower lows below the lows of August? They're very, very high. In fact, they're probable. So Hertz at current is setting up as being a short trade. So I would not go buying these shares unless, of course, you're a swing trader and you're buying them off of an intraday oversold level and you plan on not going the next day into the market long. I would look to probably short the shares on a counter trend move and really short the shares on a break below the August lows, because in all probability, we're coming down to the June 17 lows, if that makes sense. So Hertz, I would avoid. And with that, it's 5:31, folks. I went a little bit over here. If you could please, again, for those who are just joining, click that like button, hit the subscribe button. If you're not currently a member, join the Contrarian Trader. You get Swing TrendSpider with the silver and gold level memberships and titanium level, much lower monthly pricing or annual discounted pricing, and you still get all the benefits, not TrendSpider, but a discounted pricing. I just want people to join in, and everybody have a really great day. Stay small today to the long side and be profitable, and you'll watch my monthly commentary in a moment. I'm going to link to it. It's going to take me a few minutes to do that, but I'll link to it at the end of this video. Have a profitable trading day and be well. Thanks for joining again.